Hi, everyone. Thank you for joining today's webinar, Planning to Buy Your Next Home and Making the Most of Your Financing Options in a Challenging Market. We have two loan officers here today to present. We have Michelle McCarthy on the purchase side and Scott Shoebridge on the equity side. Michelle has been in the mortgage industry for 18 years and with First Tech for the last 14, and Scott has been here at First Tech for the last 12 years. They both value being a trusted financial advisor, and they look forward to answering your questions today. So with that, I will go ahead and pass it over to Michelle and Scott.
Thank you, Melissa.
Thank you, Melissa. So today we're going to go over the agenda, which is the challenges of making a transition, planning for it, how to prepare, how to get your financing in order, your financing considerations, and the possible solutions that you can have, and what to expect from this entire process. This timeline can be really tricky. Which comes first? Do you sell your home or do you find a new one? Are you going to be able to qualify for possibly two mortgages at the same time? So if you decide to buy a new home before you sell your current one, can you afford that? What are you looking for? It's a competitive landscape. Are you in a competitive market right now where you're going to be competing against multiple offers? Something to consider is contingent offers. They may be more of a disadvantage in this landscape. How disruptive is it going to be to your regular life? Is it going to be disruptive to move into temporary housing if you're in between homes for a short period of time? Would you rather just move from one home to another and be done with it? So in the planning, let's talk about your reasons for moving. You want to include those in the process. Transitioning with a family. Are you transitioning with a family into a new neighborhood, new area? Are you looking at changing your household dynamic, adding in multi-generations into your living situation? Are you moving for a new job or better schools? What factors are you looking for? What are you going to do with your current home? In this rising market, you may find it advantageous to take your current home and rent it out, make it into an investment home, make that work for you. So how much can you afford if you want to do that? Some other things to consider are how long you're going to be in your new home. Typically, when you buy your first home, you're only in that about 5 to 7 years before you make a change. Some things that you really want to understand are the market conditions in your current market and in the future location that you're looking to buy. How competitive is it? How much over asking are you going to expect to have to pay? How much time you're going to need to make this transaction? Do you have to make it in a certain period of time for your job or for school starting? You want to plan all of those things out. So to prepare, you want to get your finances in order. You want to find a team of professionals, a really good realtor that knows the area that you are looking to buy in, one who is seasoned, who knows exactly what you need to do to get your offer accepted. You want to look at a good mortgage loan officer, a loan officer who's going to help you with your debt to income ratio, to help you get your assets aligned. Also, an equity loan officer. They're going to be very helpful in getting your assets aligned and figuring out the best way to make the money work for you. What kind of home improvements you're going to need to make on your current home to raise the value of your current home's appeal or to make it easier for you to rent out. So the financing considerations. Will you have the assets available for a down payment? Assets mean your down payment money, your closing costs, everything you're going to need to get into this house. Now, can you afford to increase the offer on the new home? Currently, right now, homes are going for over list price. And when they do that, you need to figure out what you personally can comfortably afford and be comfortable with. What is your highest and best offer that you can give? In that being said, when you go to sell your home, do you need to sell your home quickly? Can you afford to accept a lower price on your current home to make this financing work? Managing your debt to income ratio. This is the most important. This is how much you may be approved for and how much you're comfortable with. Managing your debt to income ratio is going to include how much your current mortgage payment is, how much your new mortgage payment is going to be, how much your current installment loans are, so your auto loans, student loans, even if they're deferred, we still need to figure out what the payment is. Even credit cards, even if you pay them off monthly, you want to consider what your minimum monthly payment is. All of those factor into your debt ratio. Contingent offers. As I said before, in this market, contingent offers are a really hard way to go. Most sellers are not willing to wait for your current home to sell before that they can close on the sale of their house. So you want to look at making an offer that isn't contingent upon the sale of your current house. Do you have the assets for fixing up, again, your current home or improving that new home? Do you want to make some improvements on that new home you're getting ready to move into?
And I'll kind of dive into the exact same questions, but on the home equity side here. So will you have assets available for the down payment? And that's where I can come in. If you don't have the assets in a checking, savings, IRA, you have a family gift, let me help you tap into the home equity of your current home to use that as the down payment. Can you afford to increase your offer on the new home? Like Michelle said, a lot of homes are going over asking price. So if we do a home equity line of credit for $50,000 as a down payment, should we maybe do it for $75,000? Do you think you might need a little bit extra for the down payment if things are going over asking price? Can you afford to accept a lower price on your current home? What is your situation? Do you need to get out of your home right away? If so, can you afford to take a 5, 10% cut on the sale price of your home? That's really up to you, and we want to help you make that decision, provide input, and do what we can to help you out there. Managing your debt to income ratio, just like Michelle said, this is one of the most important factors within your application. Are you managing 2 homes right away, 2 payments, and a home equity line of credit or home equity loan? Do you have car payments? Do you have student loans, credit cards? If you are just over our debt to income guidelines, I can help with that with the line of credit. We could use some of your equity as a down payment for the new home, and also some of the equity to help maybe pay down the credit cards if we need to, pay off that car loan, just to really help with that debt to income. We want to be your partner with this to make sure that we can get you from start to finish. Contingent offers, like Michelle said, it can be a tough market for that. Are you in a competitive market? Do you need a contingent offer? We want to partner with you on that and help you decide if that's the right avenue. Assets for fixing your current home or improving your new home. What are you doing with the home that you are leaving? Are you selling it? Are you going to rent it? Do you need to put a little bit of money into just a quick paint job, something to make it, you know, a better market appeal or curb appeal for somebody who will be renting it or who will be buying it? Again, we can use the line of credit as the down payment for the new home to help manage your debt to income, to help fix your current home, or help improve your new home. The new home that you're buying, do you need to help remodel the kitchen, do new landscaping, anything like that? And that's where the home equity can really come in handy with all of this. And different financing solutions. So a bridge loan is technically a home equity line of credit, and you're only using those funds on your current home to help as the down payment on the new home. And we can try and get that done as fast as we can because you're probably going to be under contract for that new home already. The home equity loan and home equity lines of credit, these are really great to get set up well in advance before you know that you are under contract or going to buy a home. So we suggest trying to get the home equity set up 3 months, 6 months, 9 months, sometimes even a year before you're actually under contract, just so you are prepared. You can pull that trigger with Michelle right now and say, hey, I have this line of credit set up as a down payment, let's go. And Michelle, did you want to go over the next few items?
Oh, thank you, Scott. So we have options where you could do as low or no down payment for buying a new home. Depending on credit score, you can go as little as 0 down on a new home mortgage. Or you can do a combination loan where you do an 80% first mortgage and a 15 or 10% second mortgage. We can do as little as 5% down or 0 down on a new home. What's going to be the best fit for you? Some of the options that you can also look into is getting gifts. Are you able to get some inheritance early? Gifts from family can be really helpful when you're looking at purchasing a new home and having a down payment. Some of the other things that you can tap into are your current assets. You can borrow against your 401k most times. You can look at doing a stock loan. If you don't want to sell your stocks, you can get a loan against them. That doesn't count towards your new mortgage payment or your debt ratio. Some great tools for this. So what happens next? What happens next is you get your financing set up. You want to start applying for that right away. This is going to help you in making your financing decisions. Are you going to sell your current home? Are you going to turn it into an investment and reap that benefit? You want to figure out your timelines and expectations. Some of the things in this market mean you may have a seller that wants to be in the house 60 days after closing and you purchase the home. Is that going to be within your timelines? Are you going to be able to meet that expectation? Sometimes making that an offer in your purchase contract allows you to get the deal if you're willing to let the seller stay after. Other things to think about is the walkthrough, getting your utilities set up, locating essential controls, deep cleaning the home, changing your locks and passwords, changing your address. That's your new home to-do list that you also have to think about. So many things to get started, but really essentially applying for your financing and getting set up for what is going to be the best fit for you. That's what you need to start doing immediately. Thank you so much for taking the time to listen to us today. And if you'd like to make an appointment to talk to me or Scott, we are happy to help you. Our phone numbers are on the screen right here, and you can also email us. We want to be that trusted advisor to help you figure out your next steps in life. Really appreciate your time today.